All right, so many of you who are familiar with the Grateful Dead are familiar with trouble ahead, trouble behind, and you know that notion just crossed my mind, a famous phrase. Anyway, with that said, trouble ahead, trouble behind, the stock market, yes, what did we do? Last week, we went right up to that pivot area with Fibonacci retracement as well as the person's pivot resistance. And then what has happened since then? A lot of volatility in the market. Right now, our algo room, current positions, it is now Wednesday, Prince Spaghetti Day, or what we like to call Department of Energy Wednesday. And with the on again, off again market, with a simple tweet yesterday caused the market to rock and roll to the upside. Today, more fear of recessionary pressures around the globe. And again, this market's on a strike. There's no one that really wants to come in and support market rallies, and this is what we get. Last night we walk in at around 4 in the morning, European markets, we started to see the market turn red. Now, what this indicator and what you see on your screen is basically the PPS indicator, which can be found on Thinkorswim, TradeStation, of course, and Trade Navigator, Genesis. Basically, what this indicator is it shows that the 15-minute is in a sell and the higher time frame 60-minute is in a sell. That's what this indicator is sharing with us. It also highlights all of these resistance lines in the sand. Those are what we call the last conditional change indicator, something I wrote about 15 years ago, and it's what we've created a trading strategy out of, right? So basically we are using 2 time frames. And why is the algo automatic system not short on the 15-minute model? Basically because a sell signal took over at around 4 in the morning. It's in an active trade, so it's not going to generate a new trade. So that's the problem with that on the algo. The 5-minute, though, generated a trade this morning right after the 9 o'clock time period when we were in our trading room, and it just exited the position on a compression stop function. So I'm just giving that. The advanced decline analysis today in the S&Ps, super duper negative. And when I say super duper negative, I mean you can clearly see our board here, gang. This, until we get the advancers, which are 32, decliners are 462. Now that's in the S&P 500. We're slightly oversold. The fact that we do have this system is now flat. It's vulnerable for maybe a dead cat bounce to the upside. We'll see. Now, let's take a look at a couple other models here. This is crude oil. Today in our live trading room, what we warned everybody was we had a short position and it got out of it. When it comes near profit potential, it jams a stop on half the position and it trails the stop on the balance. The report came out, stopped out the balance. Then we generated a new short. It got out of half the position, and it's still in an active trade right now, short from 54.96. And this, too, just like the last one, has an emergency stop put in, so it's going to protect that profit. Gold, our trade right now, we are in an active long position from 15.24, and it will have a trailing stop function in place to protect that profit. And here we have gold that already scaled out of 1. You can see there's the scale out of 1. It's trailing the stop. So if gold continues to break out, it'll trail a stop. This is the trade room at Person's Planet. This is the algo room. What about the rest of the stocks and our other positions? Well, for new traders right now, the tail of the tape, we are actually, from a top-bottom line approach, going to be experiencing a breakdown, and unfortunately, if we close here, if you're bullish, this is unfortunate. If you're bearish, this is great news for bears. Okay, so what is the great news? If we break out in the S&P 500, or break down, shall I say, currently the advanced decline is making a negative, what we would call a zigzag pattern, meaning it's made a high, a lower high, and it might make a new lower low. If we take out that lower low reading, this to me looks more indicative of a bear flag, and so A, B, if this is a C wave, then the measurement to D is extended down, and depending on where you draw your line from, more or less, we could see a move back to 270. What do I mean where I draw the line from? Well, if you take the distance from AB and add it to here, then you're going down further. If you add it to the midpoint, you're going here. If you add it to the top, you're going there. So the area target, if this does break down and takes out the low, there's your target using an ABC or bear flag type pattern. The advanced decline is negative, and here's the other how you can utilize the PPS indicator. So whether it's Thinkorswim, TradeStation, we have 2 time frames, the weekly and the SPY. This is a SPY daily. The weekly's been in a sell mode. The daily generated a buy and now has failed. It's going into a daily sell. So you got weekly negative, and you're going to get daily today negative. So you got 2 time frames, the short-term daily in sync with the weekly, and the last time we had that was back over here in the September-October time period. That's pretty negative for the market overall. There's not much in the market right now to help out from a defensive standpoint, meaning we're not getting participation from transportations. We're not getting participation from biotech. We're not getting participation from energy, financials. Everything that should help lift the market other than FANG stocks is also rolling over to the downside. So most importantly, let's take a look. I just revealed that we have if at the end of today, Wednesday, and again, it is Wednesday, August 14th, if we close here or lower, we generate daily sell signals with declining MAs, moving average. Moving averages down on the NYSE, daily sell signal. Moving averages falling on the NASDAQ composite, daily sell signal. Moving average falling and new daily sell signal in the Russell. The only thing that's not generated a daily sell signal yet would be in the NASDAQ 100, but I'm sure that'll come soon. Either way you look at it, S&Ps, falling moving average, daily sell signal. 5 of your top stock indices all have different capitalized weighting with sectors from interest rate sensitive to technology to financials. All of those stock indices are going to be generating daily sells, which is with a weekly time frame. So that's not positive. More importantly, the advanced decline is breaking down, making new lows in almost every single stock indice, or except for the NYSE, New York Stock Exchange Composite Index. When I see a new advanced decline breakdown in the Dow, a new advanced decline breakdown in the Qs, a new advanced decline breakdown in the spiders, and again with the Russell, that tells me there's more trouble ahead. So it's not important how a market opens, it's how the market closes. A close lower than this swing low is projecting substantially lower prices to come. So please watch that for the end of the day, and this would be a good example of when you would use maybe put options, out of the money put options on a signal. And you know, this market has been, it's not how the market trades during the day, it's been great day trading as our algo room has been just knocking it just dead on a dime here. It's nice to see that like I said, the market could be due for a little dead cat bounce. We're flat. The ES, by the way, since I was talking, the gold took its profit. It got stopped out on a trailing stop function there. So gold is now out of its trade. Let's take a look at that, and you can see what I'm referring to. So it had a nice little trade. And by the way, this is what's really neat about our algo room and the indicators, right? So moral of the story is here we have a buy signal breakout. It had a couple little tries, and it got bought a breakout, got nicked, took a sell signal, got nicked, and went down. So that's just a stop function in volatility. That happens. But here it gets long and makes up for everything today. So very good trade overall. 3 trades, 1 good winner. But this last long position came with an uptick in the volume indicator. Now it's flat. So what's the moral of the story? If gold holds here, there's a shot that we could see a recovery in equities. Crude oil, as you'll notice, we are in an active short position right now in crude. It was in 2 contracts, covered 1. It has an emergency stop right there at that orange line. Crude oil and energy crude oil and equities today almost trading tick for tick. Makes a new low. S&P's made a new low. Watch that relationship today. If crude oil somehow bounces out, and we're going to need crude oil to maintain, if it is going to bottom out today, a couple little weird things about crude oil. It's sold off, but it does not have confirming volume. So what do I mean by that? Well, if the crude oil is trading with connectivity with equities, if crude oil breaks back above its, say, open outcry or 8 o'clock highs, that's 55.50, a close greater than that line in the sand up in there, it's going to push this market right back up, and that could help support equities. So selling now and establishing a big short position in equities may be hazardous. It would be anticipating a signal. If crude oil does trade lower today and takes out 54, we're going to be testing the lows at around 50, 52, handle one more time. That's a given. But this market is making a new low on light volume. So we are sitting here in a situation where we have a division between wanting to sell overall market weakness, but indicators aren't lining up 100%. So today's close, middle of the week, it's going to be pretty critical of which way this market goes. Again, the volume action and the breadth action, little too heavy right now. Maybe we get a lunchtime pop, but it's really the last 15 minutes of the day that's going to matter for this equity market. And what do I mean? I mean, we're talking if we close here or lower, we're projecting a bigger move, that bear flag on the daily charts in the spiders. What does that project? A move back to 270. A lot of profit between 286 and 270 to be made, all if you're just careful and watch. I hope this video shares with you, A, what we do in the live trading room here, but more importantly, how individual traders, by watching this video, can benefit by using 2 time frames and indicators when they're in sync. If the lower time frame is in sync with the higher time frame, meaning we get both sell signals, it's going to be more of a confirmation that the trend has changed. So keep that in mind moving forward. Thanks again for watching, and I hope at least you got an idea of what the indicators are doing around here, how we're trading and taking advantage of this intraday volatility, and more importantly, what our current outlook is for the U.S. equity indices. Thanks for watching.